Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Okay, so today we're diving into ASML's first quarter earnings call for 2025.
That's right. And ASML, for anyone needing a quick refresher, they're absolutely central to the whole semiconductor game. They build the lithography machines, the really complex bits of kit needed for advanced chips.
Exactly. So this call, it's kind of like a checkup on the health of the entire tech sector, wouldn't you say?
Definitely. It gives us a real window into what's happening. We're planning to, cut through the noise and focus on the stuff that really matters from that call.
Right. We'll hit the financials, obviously, but also what's actually driving things like everyone's talking about AI, right?
Yeah, AI is huge. And we'll look at their tech, the EUV advancements, both low NA and the new high NA stuff. Plus, the global picture, things like tariffs. That's definitely on the radar.
Okay, let's jump right into the money then. Q1 2025. Net sales, 7.7 billion.
Spot on.
Yeah.
Right in line with what they guided.
And digging into that, the actual system sales were 5.7 billion.
Yep. And the interesting bit there is the split. EUV, the really high-end stuff, was 3.2 billion of that. Non-EUV was 2.5 billion.
And the end market, logic versus memory?
Logic took the bigger slice, 58%. Think processors, CPUs, GPUs. Memory was the other 42%.
Okay. And it wasn't just selling new machines, right? There's the installed base management.
Exactly. That pulled in another 2 billion. Services, upgrades, keeping all those machines humming. It's a really significant, stable part of their business.
Good point. Now, the profit margins, I heard they were better than expected.
They were. Gross margin hit 54%, which is above their guidance.
Why was that?
Well, they pointed to a few things. Hitting some productivity milestones with customers on EUV, a favorable mix of the specific EUV systems they sold, and, customers choosing richer configurations, higher average selling prices.
So basically selling more of the premium stuff and it performing well.
Pretty much. And that flowed down nicely.
Yeah.
Net income was 2.4 billion. That's,
Yeah.
€6 per share.
Nice. What about looking forward? Bookings.
Q1 net system bookings were 3.9 billion. 1.2 billion of that was EUV, 2.8 billion non-EUV.
And the logic memory split in those orders? Still favoring logic?
Yeah, pretty similar to the sales breakdown. 60% logic, 40% memory. Shows continued demand there.
And they're returning cash to shareholders, too. Buybacks.
They bought back about 2.7 billion of shares in Q1, and they're proposing a full year 2024 dividend of 6.40 yards per share.
One thing, though, free cash flow was negative.
It was, yeah.
Yeah.
Negative 475 million. But they said that's mostly down to timing, when payments came in, and also heavy investment in, building out capacity for the future, not necessarily a red flag.
Okay, so financials look pretty solid overall. What's actually pushing the demand? You mentioned AI earlier.
Yeah, AI was definitely the star of the show, driver-wise. They repeatedly call it out as the key engine for semiconductor growth right now.
So the AI boom is directly translating into orders for their machines?
Absolutely. They even suggested that if this strong AI demand keeps up, their full-year revenue could actually land towards the top end of their 30 to 35 billion range for 2025.
Wow. So if you were watching AI, you have to watch ASML.
Pretty much. Beyond AI specifically, they expect continued growth in leading-edge logic chips generally, and memory demand looks like it'll stay strong, similar to last year's levels.
And the service side, installed base.
Also expected to grow. More EUV tools out there means more service needs, plus upgrades are ongoing.
And they still think 2026 is looking like a growth year?
They reiterated that, yeah. So the fundamental picture seems quite positive.
Seems a but.
Yeah.
There's always a but, isn't there? Tariffs seem to be the main worry.
That's the big uncertainty they highlighted. Tariffs. There's a lot of, unknown territory there.
How could it impact them? Directly? Indirectly?
Both, potentially. Direct impact could be taxes on their sales, or on parts they import or export. They said they're working with customers and suppliers to try and limit that direct hit.
Okay, trying to manage it.
But the indirect impact, that's much harder to gauge. If tariffs slow down the whole global economy or demand for electronics, what does that do to chip demand overall? They basically said it's impossible to call right now.
Right, and that uncertainty is feeding into their guidance for next quarter, Q2.
Exactly. That's why the Q2 net sales guidance has a bit of a range. 7.2 billion to 7.7 billion.
Installed base management should be steady, though? Around 2 billion?
Yeah, that's what they expect for Q2.
And the Q2 gross margin guidance reflects the tariff concern, too. Wider range.
50% to 53%. That width is partly down to that tariff uncertainty.
And looking further out, second half of the year, margins might dip a bit.
Potentially, yeah. They flagged a couple of reasons. One is starting to recognize revenue for the new high-NA systems, which usually start with lower margins. Also, maybe limp upgrade revenue compared to the first half. And hanging over it all, the potential tariff impact.
But despite that second half caution, the full-year margin target is still 51% to 53%.
It is, yeah. But with that big asterisk next to it, saying subject to tariff uncertainty.
So kind of a wait and see on that front.
Definitely.
Yeah.
Depends what actually happens with trade policy.
Okay, let's shift to the tech, the really cool stuff. EUV lithography.
Right. So updates on both their current workhorse, low-NA EUV, and the next generation high-NA EUV.
Low NA first, that's the NXE.3800E system.
Yep, they're busy upgrading the ones already out there to hit 220 wafers per hour. That's a key productivity boost.
More wafers per hour means cheaper chips, ultimately.
Exactly. And all the new systems they ship now are already at that spec. The big news is that this low-NA tech is now really hitting its stride, mature enough for high-volume manufacturing at both logic and memory customers.
That reliability is key for chip makers, I bet.
Absolutely. And these productivity gains, they help lower the overall cost of using EUV. This makes it more attractive to use a single EUV exposure instead of multiple complex steps with older tech. They see this particularly helping in DRAM manufacturing.
Okay, now for the really cutting-edge stuff. High NA EUV, EXE platform.
Yes, high-NA. They sounded quite positive. Customers presented some good results at the recent SPIE conference, showed progress on performance, maturity.
And the big promise of high NA is simplifying things, right? Fewer steps, faster production.
That's the goal. Process simplification, cost reduction, cycle time reduction. They actually said high-NA seems to be maturing faster than low-NA did at the same point in its introduction.
Any specific examples?
Yeah, Intel apparently reported cutting process steps on one layer from like 40 down to under 10 using high-NA. That's huge.
Wow, 40 to under 10?
And Samsung reported something like a 60% cycle time improvement in one use case. These are the kinds of benefits that get chip makers excited.
So where are they with shipping these high NA tools?
They shipped the last of their initial R&D tools, the EXE.5000, in Q1. Those are now out at 3 customer sites for learning and development.
And the next version, the production-oriented one.
And that's the EXE.5200. Higher productivity, more mature. Those started shipping from Q2, so basically right now.
And how do they see customers adopting this? Is it an overnight switch?
No, definitely not. They laid out 3 phases. Phase 1 is now R&D. Phase 2, think 2026, 2027, is early production testing, maybe on just 1 or 2 critical layers.
Okay, dipping a toe in the water.
Exactly. Then Phase 3 is the big ramp for high-volume manufacturing on critical layers. They see that mostly happening in 2027, 2028. It's a gradual integration.
Makes sense for such a complex, expensive technology.
Absolutely, it's a massive undertaking.
Let's talk China. That market seems to be growing in importance for them.
Yeah, they revised their estimate. Now expect China to be slightly over 25% of their sales this year. That's up from the low 20s estimate before.
And that's driven by?
Strong demand for their deep UV systems. So not the absolute latest EUV, but the generation before. Still crucial for loads of mainstream chips made in China for domestic use and export.
Interesting. So sales share is up, but what about their order backlog? Is China's share growing there too?
Not really changing much, apparently. Still in that 20-25% range of the total backlog. So strong current shipments, but the long-term order book mix isn't dramatically shifting, it seems.
Have the tariff talks affected business with Chinese customers?
They said fundamentally no. The basic business conversations haven't changed. Demand, especially for those mainstream GUV tools, remains strong.
And the customer base in China? Still just the big players?
Well, the big domestic names are still a huge part. But they mentioned the customer base is broadening, seeing more orders from a kind of longer tail of smaller players too.
One technical point, can China make, say, 28 nanometer chips with the DUV tools they have access to?
ASML confirmed, yeah, technically possible using older DUV tools like the 1950 models or below, combined with multi-patterning techniques. It's more complex, but doable.
Right. Good context. Okay, zooming out again. What's the big picture, the long-term view from ASML?
They see the end markets continuing to shift towards more advanced logic and DRAM. Think AI, high-performance computing, all that driving demand for the most capable chips.
And their tech roadmap supports that.
They believe so. The continued improvements in low-NA productivity, plus the introduction of high-NA. They see this combination as key to reducing the cost of making these advanced chips, which in turn enables more single-exposure EUV use.
And they stuck to their big 2030
Yep,
targets.
reiterated that 2030 revenue opportunity of 44 billion to 60 billion, with gross margins potentially hitting 56% to 60%. So still very bullish long term.
A lot of that hinges on getting High-NA adopted, right? How are they making the case for such an expensive new technology?
Their focus right now, they stressed, is less on the initial price tag and more on proving the tool's maturity and performance, ensuring it actually delivers that lower overall cost of ownership for the customer through simplification and yield improvements. That's seen as more critical for adoption.
Makes sense. Get it working reliably first.
Exactly. And they kept highlighting the benefits of single-exposed litho, whether it's advanced low-NA or high-NA. Simpler process, better yield, lower cost compared to complex multi-patterning.
And they expect adoption of single expose to just gradually increase.
Yeah, with each new customer node, and as the EUV tools get even more productive, they think DRAM might move faster initially because memory makers currently rely so heavily on multi-patterning.
Have they got orders for High-NA yet beyond those initial R&D tools?
They said they have double-digit bookings already. These cover that Phase 1 R&D and Phase 2 early production testing.
But not the big high-volume orders yet.
Not yet. They expect those Phase 3 orders to come later, probably beyond the second half of this year, as customers really gain confidence in the tech.
Got it. Any final thoughts on the geopolitical side? Anything else mentioned?
Just briefly touched on a couple things. One was the idea that spreading chip fabs out geographically, for supply chain resilience, that might actually increase overall demand for equipment just due to some inherent inefficiencies.
Interesting thought. But tariffs complicate that.
Hugely. That uncertainty makes it hard to model. And they also acknowledge the sort of contradiction maybe in the U.S. pushing for domestic chip making while potentially putting tariffs on the very tools needed to equip those fabs.
Yeah, that's tricky.
They suggested that the industry and governments are starting to recognize this complexity, leading to a review of how tariffs might apply specifically to semiconductor equipment.
Okay, so wrapping up. It feels like a pretty strong quarter overall, despite the headwinds.
I'd agree. Solid financials, AI providing a really powerful tailwind, exciting progress on the tech front with both low and high NA EUV.
But definitely navigating some choppy waters with the tariff uncertainty.
For sure. That's the key variable to watch.
Mm.
But the underlying story seems to be one of continued growth and innovation leadership.
Their long-term outlook is clearly still very positive, and they remain absolutely critical to the entire semiconductor ecosystem. Just a note for listeners, their annual general meeting is coming up soon, April 23rd.
Yeah, always an interesting space to follow. ASML's performance really is a bellwether.
Thank you so much for tuning into the quarterly call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.